So, my question, Joe, being here for a few months, rewind it and tell us what you were thinking whenever you decided to come work for GLH.
Well, if I'm being completely honest, I never thought I would be working for a log home company. And that
Who does?
I mean, of all the places that I was shopping out to, it's not something that I had considered. But after we sat down and looked at A, what we do and how awesome our product is, and then B, all of the opportunity that is here. We've been in business for 47 years and we're really, really good at what we do, but we've really just scratched the surface of what's available and the growth that we can have as an organization and what's out there for us. There's not another log home company out there that's doing what we're getting ready to do. And that is just, if I'm being candid, it's just flipping exciting. I can't even stress how excited I am about what our future looks like, because no one out there is doing what we're gearing up to do right now.
Also, you thought Lynn and I were the coolest.
I mean, you and Lynn are really damn cool.
Yeah. Today, we are going to talk to our Vice President of Sales, Joe Newberry, who has been with us for about a couple months now. And he is going to, he has a background in finance, in the finance world. And so he is going to explain all the things financing for us today.
All the exciting things.
All the exciting things financing, exactly.
Hi, I'm Lynn.
Hi, I'm Lacey.
Hi, I'm Joe.
Welcome to the Acorn and Leaf podcast. Today, we're going to talk about the riveting topic of financing of your new construction, whether it's a log home or a hybrid, or maybe even a park model. So we've got with us today our VP of Sales, Joe Newberry, who has got a lot of background in this industry. And so we're looking forward to talking to him about some of the things that you need to worry about, do, plan for when you're planning your financing, and so that you don't have any issues in this area. So welcome, Joe.
Great to have you.
Thanks for having me.
Mm-hmm.
Joe, when we start off with telling everybody a little bit about your background and experience in the mortgage industry.
Well, I got my start in the mortgage industry with a company called Veterans United, where we specialized in VA home loans, and ran the number one VA loan team in the country for a long time, and transitioned from there to owning my own mortgage company, and then even moving on from there to another mortgage company, and then also worked for a Keller Williams real estate brokerage in Evansville, Indiana, as the CEO for a while, and did loans specifically with that branch. And I've been around the real estate and mortgage business for a minute, so I've learned a thing or two, I think.
Mm-hmm. Long time.
Well, what do you think is the most interesting thing that you have learned in the mortgage industry?
Well, I think it's most people can afford a lot more than they think they can. Most people are looking at the big number. It's like $400,000 or $500,000 or $600,000 or whatever the number may be. And, they may limit what they think they can do with inside that number without actually considering how the mortgage process works and how that breaks down into a payment and how much their interest rate affects that payment. We're in a mortgage world right now where interest rates are higher than they've been for a while. So I think sometimes people are a little surprised at what the numbers shake out to be. When mortgage interest rates are lower, they can obviously afford a lot more. And when interest rates are higher, they can afford a little bit less. But the bottom line is look at your monthly payment, not your total that you can get comfortable with spending. Because if you're looking at that big number, it's kind of scary. But if you're working with your monthly budget and your monthly payment, it's a much better place, a more comfortable place to start.
Well, how do people go about finding out what that big scary number actually is, what they would qualify for?
That's a great question. So the pre-qualification, the pre-approval process is the same for a log home as it is a construction loan, as it is for a traditional home, as it is for a home equity line of credit. It's getting with your lender and finding out what you qualify for. Now, the interesting thing about that is lenders have different guidelines, and Fannie Mae and Freddie Mac have different guidelines, and HUD has different guidelines. So there are all these overlays of guidelines that are out there, and you might find that with one bank, you might qualify for $300,000, and you might go to a different bank and find out that you qualify for $700,000. It all just depends. I know, right? Everybody's different in what they allow for. So one thing that I encourage is making sure that you're checking with your different options, that you're seeing what's out there. Now, I don't know if this is the right place to do a plug for us, but we are working on our own in-house option, which will be down the road, which will be specifically geared towards log homes. But that said, it is in your benefit as a consumer to shop. In fact, credit guidelines allow for you to have your credit pulled multiple times during the shopping process without any impact to your credit, so that you can find the best option for you. A lot of times I'll have someone that says, well, I only qualify for this, but what I want is going to cost this. And then my very first question to that is, have you spoken to just one lender, or have you gotten a pre-approval from multiple lenders? Because again, those guidelines are very, very different.
Because a pre-approval is different than, that's just kind of a preliminary check to see what you could be able to afford, right? It's not a super deep dive into your actual credit. They're not really digging into things to get that number. So it could be different from that pre-approval than your final loan, right?
So yes and no. A pre-qualification is like the very lowest level of initial step in figuring out what you can spend. A pre-qualification means I've looked at your credit, and based on what I see in your credit report and what you've told me your income looks like, I think I can do this number. It's all based on what the credit report says and stated information from you as the consumer. A pre-approval is a little bit deeper dive. A pre-approval means I've seen what your numbers are in your credit report, but you've also given me stated information related to your income and your assets, but you've also backed that up with documentation. So if I'm a lender, I might already have your W-2s, I might already have your pay stubs, your tax returns, your bank statements, and a pre-approval is a lot more solid of an offering from a lender to tell you what you can really spend. Unless you've not given the lender all of the information, or they've not done their job properly, a pre-approval should be, I won't say bulletproof, but it should be as close to you can get as getting a full approval without going through the full underwriting process early on.
Okay, so pre-qualification is kind of a baby step into the process. Pre-approval is a bigger jump into it. Okay.
Yeah,
right.
That's exactly right.
So would you recommend to people that if they're thinking about building a home, that one of the first steps they would be to just do the pre-qualified step and to get an idea of what they might qualify for?
Absolutely. A pre-qualification is a good first step. A lot of lenders will do a soft inquiry at the pre-qualification step. So it kind of gives you, a really, really early preliminary place to start. In the end, you definitely want to go through the steps of a pre-approval before you start doing things like going under contract and things of that nature. But if you're working with a solid lender, a loan officer that knows what they're doing, they're going to move you from pre-qualification to pre-approval quickly. Back in the day when I was doing it, we would move sometimes from pre-qualification to pre-approval within a business day or two, depending on how serious the shopper was, because ultimately getting you to the state of pre-approval is really the lender's offering, saying, hey, go get your dream, go achieve your dream right now, go make an offer on a house, go build your log home.
Well, I know a lot of people have probably bought a home where they've had to go to the bank, and getting that appraisal done, that sort of thing is quite different than a construction loan. Do you want to explain to people a little bit about that process? Because most people have never gone through that.
Absolutely. So, your traditional process, your appraiser goes out to your house that you're buying and looks at the home and does, the formal appraisal process. Construction loan is different in that you're building an asset that doesn't exist yet. And someone in-house on the lender side is going to have to assess that value based off plans and specs. So, it is a little different in that you do have to move the process forward a little further forward in the purchasing process faster than you would traditionally with the buying process, because you've got to make a commitment to your builder. You've got to make a commitment to, if you're buying a log home, say from us, our design team has got to put a certain level of detail into the plans and specs that can then be provided to the lender. And then the lender is going to assess the value based off of what they see in those plans and specs. Different lenders have different guidelines as far as a minimum amount of information that they'll allow in plans and specs to make that value, to determine that value. Some lenders, and this is where it gets a little bit more detailed related to specialized lenders. A log home lender might allow for less information in the plans and specs than a traditional lender might allow, only because in doing so, they know that the final detail in the plans and specs is going to come later in the process. Whereas, let's say you're doing business with your regular bank at home, they might require finals before they'll issue a value. They may even require that you've got your land, you've already closed on your land. So again, lenders have different guidelines in what they will and won't allow for. Ultimately, you want a lender that's got a little bit more flexibility in issuing a value on your plans and specs. That way you can get your value early and know that you're cleared and good to go based on that original pre-approval amount that fits inside of what that value is and what you're building.
It sounds like there's quite a difference between lenders. So what kind of questions, if someone's going and evaluating lenders, what kind of questions should they ask that lender?
Obviously, minimum credit guidelines to be approved is a good base question. Sometimes there's this misconception out there that if you're working with a lender that allows for a lesser credit score, that they're, more of a bargain lender, if you will. But that's not always the case. Generally, if a lender is willing to allow for a lesser credit score and qualification, that tells you a couple of things. It means they have more open guidelines. That means that their underwriting process is probably a deeper underwriting process, which is actually a good thing, because it means they consider more than just what they see on the surface to get you qualified and move your loan process forward. It means their books are generally a little more open in what they can do for you in moving the loan process forward. So I'm a fan of lenders that have a lesser credit score to qualify you. So traditional conventional credit scores nowadays are about 660 or better. If you're doing a VA loan, it's 620 or better. If you've got a conventional lender that is going to allow for 600 credit scores or better, that tells you again that lender's books are going to be more open and more available to allowing for more in the process to get you where you're going and get you where you're going in the end. Flexibility is ultimately what it boils down to. You don't want a lender that's got a higher credit score qualification, because chances are they're going to be more difficult in moving through the loan process, because it tells you that their risk guidelines are a lot higher.
It makes sense. I never thought of it that way.
Right. Sounds like that shopping process, or just having conversations with multiple lenders, is for a lot of reasons, a really good idea.
Absolutely. Yeah. And that question will also lead to additional information that the lender might give you. They might say, well, we allow for a 620 credit score, but we want 2 months principal, interest, taxes, and insurance and assets liquid available in your bank accounts by the time you close. So that credit scoring question opens up to that additional information that the lender is going to be more forward in giving you. And then that's exactly what you want. You don't want to find out at closing that you need 6 months of your monthly payments stacked up in your bank statements to close on your loan, and you're just now finding out at closing. That's something you want to know in advance. And again, that's where, if you're asking about that credit score, they're more forward with the information, but the lesser the credit score means the more open they are in allowing the flexibility in you getting your loan done.
I've actually had customers where that happened to them. They showed up at closing and they needed 6 months worth of payments sitting in the bank, and they're like, "What? You're just telling me now?"
And isn't that crazy that they're finding out like right when they're supposed to be getting the keys to their house? That's crazy.
Right. And they haven't told them they need to start saving this money. I think a lot of people don't realize how, if you're going to get financing, the credit score is really important. And that they need to do the steps necessary in order to improve their credit score. They don't realize also that you can actually work with the credit bureaus to improve it. A lot of times they've got incorrect information on the file, and that you can go through and you can dispute some of those poor reports, and you can raise your credit score fairly quickly if there's a bunch of misinformation on there.
Absolutely. I don't know what the modern day statistic is. It used to be 1 in 4 credit reports had misinformation on it. That's been 7 or 8 years ago. I don't know what it is today. But even if that fact still holds true, That means that, with us in this room, that chances are one of us has something on our credit report that doesn't belong there. If that's the case, I mean, it's as simple as you're allowed one copy of your credit report for free. It's a federal law that you can, I believe it's annual report.
Every year.
One for free. Every year.
Search for it online. It's a .gov website. You go in, you plug your social in, they ask you some questions to verify your identity, and then you get all 3 of your reports for free. It's something that you should put on your calendar as a reminder once a year to pull your free credit report and then go through it. And all 3 credit reports are different. What I tell people about credit reports, and most people don't know this, the credit bureaus are for-profit companies. They're in business to make money, and they're the people that give the banks the information about you to make a determination as to whether you're worthy to borrow money. So, they do make mistakes, and they do sell your information. They don't sell your social and things like that. But the reason that you get all these credit card offers and things in the mail have everything to do with what the credit bureaus are selling about you. So yes, there is misinformation there. Get a copy of your credit report. And if something isn't accurate on there, dispute it. And you'll find that, sometimes you might even have a credit card that reports on 2 of your credit bureaus, like Equifax or TransUnion, and not Experian. And, you're not really sure why. It just depends on whether that creditor, let's say it's a, first choice Visa card, maybe they only report to the 2 bureaus, which means those two scores are affected on those 2 bureaus, but not the third. So again, look at your reports annually, verify that the information is accurate, and don't expect it to be accurate to the day. If you just made a credit card payment, it's probably not going to show immediately on your credit reports. It takes 30 to 45 days for that information to reflect, and that those creditors only report once a month. And it's not on the same day for every bureau, for every creditor. So that said, account for that when you're looking for the misinformation in your report, but definitely dispute information that's not accurate. Even if you've got collections that have been on your report, if you for some reason had a late payment or something like that, that stuff is worth disputing, even if it is accurate. Because a lot of times you can dispute information on your credit report and have it removed. Maybe the reason that you had a late payment is a legitimate reason, and you talked to your credit card company about it beforehand, and they said they were going to allow for it, but then they didn't. I see that all the time. In which case, go ahead and dispute that, and keep disputing it every month until it goes away, because eventually it will go away, and you'll see your credit score jump up a bunch.
And we'll be right back. I know. We get it. You've been sitting there, driving your car, maybe you're running on a jog on a beautiful morning, listening to this podcast and thinking about building your log home. So we made it easy for you. Start your journey with us here at Gastineau Log Homes. Family owned, women led, and proudly crafting oak log homes since 1977. As the largest oak log home manufacturer in America, we're here to help bring your dream, big or small, to life. You can call our office at 573-896-5122 or swing by the National Model Home Center here in Kingdom City, Missouri, or even visit us online at oakloghome.com to get started, because your dreams never look so good. While you're listening to this podcast, did you find yourself loving or imagining the smell of sawdust or the thrill of closing a deal? Well, good, because we're hiring. From the mill to sales to design to even shipping, there's a place for you at Gastineau Log Homes. You can apply today at oakloghome.com/careers. If you've been enjoying the Acorn and Leaf podcast, do us a quick favor. Leave us a review on Apple Podcasts or Spotify. It helps more folks who love log home living find us and join the conversation, which is such an awesome community. And hey, if you love what we do here at Gastineau Log Homes, head over to Google and leave us a review there as well. It means the world to us and keeps the dream growing. Thanks for listening and for being part of the Gastineau family. Back to the show.
So what do you see as being different about financing a log home as opposed to a stick home, as I call it?
One of the main differences is if you're gonna build a home, you go out and you find a builder, right? A general contractor. You sign a contract with a builder, and that builder is essentially going to source all of the materials that go into building that home. They're taking care of all of that for you. It's not that you don't have an input in the process. You do. You're building your own custom home, right? Unless it's a spec property. But whereas building a log home, the first place that it's different is you're getting your log home from us. We are literally custom cutting. Well, you guys know we're custom cutting every single board, every single log that goes into that house. And that's outside of the builder. So that piece is coming from us. So a lot of times lenders that don't do log homes or work specifically with log home providers, that's a different part of the process. And that's why earlier when we talked about plans and specs and that piece of the process, that's why that part matters. Because it is a step that's considerably different. It's not that material; those materials aren't coming from a builder's selection of subcontractors. Those materials are coming from us. The other piece is we're literally drop shipping that package there specifically for that client, that customer, for that specific build, and the builder's taking care of that. Everything from there is then shifted to what the builder does in the traditional build process. So it is something that is different for lenders. And that's why, again, going back to the plans and specs piece, it's so important that we need to be able to make sure that property appraises and the lender understands that that's a step of the process that is different, and that they're going to take the plans and specs earlier in the process and assess a value based on what that looks like and what they get from us and our design team. If you've got questions in financing, or you're working with a traditional lender, one of the things that I'm proud of that we've done here since being here is we've really taken an expert approach to trying to help our clients better understand the financing process as it relates to building a log home, and have tried to seek out solutions to better help them achieve their goals. Because one of the things that we have ran into somewhat frequently is traditional lenders just don't understand. And it's not a knock against traditional lenders, not anything bad. It is just different. So I think me being here has helped our clients have a better understanding, and then us helping our clients find other solutions out there, or even sometimes talking directly to their lending institution to try to help.
Because we have both a material price guarantee and a material quantity guarantee of the package, they don't have to worry about material prices going up, or the builder had forgot to put the shingles in the quote, and they got to come up with the money for the shingles and that sort of thing. So I would think that would give a little bit more security to the lender that all the material costs are accounted for up front.
Definitely. And working with a lender that understands that that's different, a log home style lender that knows those things about us, there's no question. The most common thing I've seen thus far is lenders that A, haven't worked with us, or B, don't understand the log home building process. There's so many things they just don't know to account for that are beneficial to them as a lender. That we've got to tell them, we've got to
educate them,
and the client doesn't know to tell them. So it's something that we've got to be forward with and advising them of.
Yeah. So you said that we have helped some of our clients since you've started with us, which was maybe a couple months ago, right?
Yeah.
A handful of months. So fairly new in, but I know that you've had some impact with some of our customers. So do you have an example on mind or in mind that you could tell us how you've helped?
Well, yeah, absolutely. So, I won't say any specific customer names, but I'd only been here a week or two, and one of our expert consultants was having some issues with a client that said, "Hey, this is going to end up costing way more than I thought. This isn't what I expected from the lending side. I don't think that we can build what we want to build for our dream." And this consultant, I overheard part of the conversation, and I said, well, where are the numbers coming from? Because if we've discussed budget, which we had, what we were doing from our side hadn't changed. The dollar was the same amount throughout, right? But the monthly payment had changed. And as it turned out, the client, so we got on the phone with the client and kind of talked through what the client had heard from the lender, and then said, "Do you mind if we have a conversation with your lender and kind of talk through the details?" So we did. And what we found out was there was confusion about interest rates as it related to changing from a construction loan to the actual mortgage once the property was finished. And there was confusion about this interest rate that was construction only and then mortgage. So once we talked through those details and really, really ran through what the bottom line pricing was going to be, the monthly payment when it was all said and done, the customer was like, "Wow, okay, this is different than what I understood it as." So it was a matter of the information that was being portrayed to the customer from the lender was confusing, and I see that a lot. I always talk in terms of you got to break the numbers down to an 8th grade level, just make it easy to where everybody can see what it is, and that's what we did. And, in the end, this client's still moving forward with us. And it wasn't a matter of us changing the pricing or something like that. They still wanted to build their log home. They just didn't think they could. So, we ended up moving that process forward for them just by making it easier to understand.
I think that's something a lot of people don't realize, that when during construction you pay interest only on your loan, and you're not paying anything down on your mortgage, but you're taking that in draws and you pay interest only, and then only after it transfers into a permanent mortgage do you start making your payments that include you starting to pay off your principal and pay off everything.
Yeah, and also the fact that you're drawing on that construction loan. So if you have, for example, a $500,000 construction loan, your first draw might be $20,000, and you're only paying interest on that $20,000. And as that grows is when those interest payments grow. So it's not like you're paying interest on $500,000 up front.
That's exactly
which
right.
I think is very confusing for people.
Yeah,
too.
the interest rate on this particular construction loan was 2 or 3 points higher than what the standard market rate was at the time. So the client was under the impression that they're going to end up with this mortgage at 9 or 10%. It's like, well, hold on a second. There aren't any mortgage rates that high right now unless you're subprime. So, and you're not. This person's credit scores were really high. So again, talk through the details and then got down to the bottom line mortgage and what the payment was going to be. And it's like, wow, okay. I was so confused. Let's do this. So again, client we're still working with and moving forward.
That's great.
We've got some pretty exciting things here at Gastineau that we are planning for the future. Do you want to tell them about that, Joe?
Absolutely. I mean, I'm so excited about the future of programs that we're putting together for our clients here at Gastineau. Obviously, we've got an amazing product in what we put together for our custom log homes. I mean, we're at our mill location right now, and I'm always shocked every time I come here that we're literally cutting a log specifically for each person's house. As we're getting ready to send it out to them. But, one of the things that makes sense for us to have here is to be able to give our clients a lending option that's in-house, that's specific to log homes. So we are in the process of working out relationships and building programs here to have lending in-house where we'll be able to pre-approve our clients here at Gastineau Log Homes so that, we'll be able to give you a number, not only give you a number, but also have it tailored towards log homes so that some of these challenges that do come up with conventional lenders, we'll be able to avoid some of those. In addition to that, specialized homeowners insurance that is specific to our clients, that's log home. It's tailored towards log homes. So that's something that we're working on. In addition to that, we're working on programs to help our clients source land. It's one of the big obstacles sometimes that we run into where our clients just don't have land picked out yet. We want to be able to help them do that nationwide. So we're in the process of building a program that'll answer that obstacle.
We busy.
Yes, we are very busy. Yes, we have a lot going on.
Yeah, I'm really super excited about that. And if you'd asked me 47 years ago if we'd be doing that, I would have said, well, in my dreams, So I think being able to be a one-stop location where people can come in and we can help them find their land, we can help them get their financing, help them design, and we've talked before about our phenomenal design capabilities we have now and how exciting that is, and then we can get them financed and we get it insured, and then we also our maintenance, we have a maintenance contract, so it really is a full service, being able to really take care of our customers, and I'm very, very happy and excited that we're going to be able to put that all together and make it all happen.
Building a custom home can be a daunting process. A lot of people they might start down that path, but they give up pretty quickly because it can be a lot. So I think that offering all of those things in-house is a way to just kind of ease that burden, right? Make it as simple as possible. We don't want it to be a stressful experience. We want it to be as pleasant as possible. So
yeah, I mean, the way I look at it is if we can take some of the difficult parts of the process off of your shoulders, and then all you have to worry about is focusing on the perfect design, what you've always dreamed of, the way you want it to look, the way you want to live in your home. Again, achieving that dream that you see in your head without having to worry about the difficult things. I think that makes it easier and more fun. And something that's more memorable than, hey, where do I get my loan and how do I find my land?
Yeah, absolutely.
Mm-hmm. Yeah, I think that it is. I've built so many houses over the years, and every time I do it, I tell people, I say, we have to make this easier. It has to be easier for people because a lot of people have trouble making decisions. Sure. And that's one of the things I tell people, make the decisions over a period of time before you start construction. You can make it the process a lot easier.
Definitely.
It doesn't have to be so difficult.
So as we kind of wrap this up, Joe, what would be your one piece of advice if you could give to anybody that's looking to build their log home?
So you can't get pre-approved too early. And if you're looking for direction and assistance on that, come to us. Even though we don't have our lending in-house just yet, we do have contacts and we do have people that we can direct you toward that are the right people. And again, your pre-approval, it doesn't mean you have to do anything. It just means you're ready to. That way, when you do make the decision, you know you're good to go. And obviously, work on your credit scores. Even if you have excellent credit scores, pay attention to your credit report. If you've got stuff on there that's holding you back, get that stuff fixed. It's easy to do, and it's something that even if you're not building a house or a log home, you should be looking at your credit report at least annually anyway.
People don't realize that really finding out you're pre-qualified for really determines so much in your planning, because you've got it. We can't design a house for you until we know how much you can or are willing to spend. You may not want to spend everything you qualify for, but it gives you some guidelines, and that's really like the first step.
Absolutely.
Well, thank you, Joe, very much for coming in and speaking with us today and sharing what you've learned over the years, in addition to what you've learned since you've been at Gastineau Log Homes.
Absolutely. Thank you for having me. I'm thankful to be here and very excited about where we're going.
I'd like to thank everybody for listening, and look forward to our next podcast, which will be coming out next week. And I hope everybody enjoyed this and got some information that's going to make the process easier for them.